Hi, this is Mark with Right Line Trading, and this is our evening newsletter. Starting with this disclaimer that all signals or trading opportunities that we provide are for educational demonstration purposes only. Everyone should understand that participating in the markets does involve substantial risk, and a person can lose a substantial amount of money. Always carefully consider your financial position prior to trade. Never risk more than 2% of your account on any trade, and consult a financial advisor prior to trading. Now let's take a look at two stocks. One that I think is a buying opportunity after it's come down an enormous amount. Another, which I think is a major avoid. The buying opportunity, I think, is Chewy. Now Chewy has come off of about a $75 per share price value, all the way down to its 52-week low of $50.05. Now Chewy as a company is not doing overly great. Its last two quarters, it did not report terrific earnings, and it's obviously up against some stiff competition. But right now, it's got tremendous headwind. It's got supply chain issues and the fact that there is a major labor shortage. I mean, Chewy cannot hire enough people to staff its facilities. Now, it's definitely going to be some rough sailing for a while on the stock. We're not going to see it skyrocket. But at $54.81, it is definitely way oversold. Now, I think one of the fundamental principles of trading I've always found is that you should buy when everyone else is selling and sell what everyone else is buying. Now, you have to be pretty selective in what you apply that to, but I think Chewy is one of the stocks that has a very, very positive future. Now, this is not a buy and get 7,000% on your money overnight. This isn't one of those buy on Fridays and sell on Monday stocks. But if you're looking for a stock with tremendous upside and very, very limited downside, I think Chewy is the place to go. I find just the opposite to be true of Peloton. Now, Peloton, this is a 5-day, 5-minute. That was the same chart we were looking at Chewy. Now, Peloton took a big beating when one of the TV stars got a heart attack while riding a Peloton, and it sunk the stock. But Peloton has really been Peloton as a company really is a mess. It completely misallocated funds for gearing up for what it thought was going to be a massive purchase of bicycles over the holiday, none of which has matured. It's got supply chain issues, and I don't see this stock turning around for quite some time. Well, what I think on Peloton is that you're buying into dead money. Now, there may be a technical bounce, and which I would look at as nothing more than a bull trap, where some investors will come in, pop it a bit, and then it's just going to roll over. Looking at unusual options activity today on Peloton, I believe. Let me go back and check. I believe Peloton had some. No, I think it was Chewy that did. I didn't see any on Peloton. But I see the thing about Chewy is that Chewy has a lot of upside catalysts. The problems that it has are remediable once it starts hiring the people it needs, and these supply chain issues get worked out. Chewy has a lot of upside drivers. I see no upside catalyst whatsoever for Peloton. I think it was way over purchased based on the COVID pandemic right off the bat. It does have a subscriber base, and I think so. It does going to have it is going to have significant value, but I don't see it right now as anything to rush into. It's come way down, but that doesn't make it a great buy right now. I see it sitting here around 39 to 40. Maybe we'll get an oversold bounce to 45 or more, and then it's going to roll right over. So I would definitely avoid Peloton at all costs. Yesterday, just as a quick recap, I told just everyone that they should move into Spotify because it is putting in a great bottom. And today, in a really horrific market, Spotify only made a 1.16% move down, a $2.62 move down. Very, very minimal. I mean, right now, I believe it is being held by very strong hands. And I think that Spotify has a tremendous future. I believe that its subscriber base is going to grow. Eventually, I believe it's going to be the number one, playlist podcast platform in the world. And I think that we've got a great potential upside to Spotify. I called it yesterday, and I believe even if the market continues to rip to the downside, I see very, very, very little additional downside risk on Spotify. So we've got two great trades that we can pull off the bottom: Spotify and Chewy. One to avoid, and that is Peloton. So listen, everyone, have a great evening, and I look forward to talking with you tomorrow.